Good day, traders. The 4-step method to high performance trading is a free course download for increasing your confidence in your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started. Trader Stacey Burke from Stacey Burke Trading. Today we're going to be talking about the weekly templates. We're going to review the major pairs, oil, gold, and the indexes. We're going to talk about, again, the 90-10, and we'll be looking at 3-day setups that have occurred, 3-session setups that have occurred, and then the Monday to Friday template, day 1, day 2, day 3, and then the reset, day 1, day 2, today, Thursday, free cash Thursday, and day 3, which is coming up tomorrow, non-farm payrolls, and then trigger days. So again, hunting out the best setup on the day. Now, obviously, some of the indexes, oil and gold, can give opportunities pretty much every day, but the bigger picture with the currencies, the same process applies. We can have day 3 longs, first red day, first green day, inside days, which are trigger days or signal days, which over the course of our day 1, day 2, day 3, and day 1, day 2, day 3 can help us identify the best candidate or candidates in the session that we are trading. We'll start with the Japanese yen. We'll try not to drag this out too long. Again, you can go through your own pairs and do your homework so that you have the process down. And as I mentioned earlier today, it only takes me a couple minutes to update each instrument over about 15 instruments within the Japanese session and the US session for me to just gradually have a thumb on each pair to identify the best setup. So obviously, as I mentioned, I look for the bigger template setups on the currencies, and that can be in either the US session or the Asian session, front side, back side, or I will primarily hunt out oil, gold, and the indexes in the US session because of their volatility and the amount of movement that they give off. Mondays are day 1 of a new weekly template, a new timing cycle, but we'll back this up because we'll take a look at how we headed into Monday, because as we explained, there are 3-day setups, there are day 3 breakouts, and then there are our Monday to Friday, Monday to Wednesday, day 1, day 2, day 3, and Wednesday to Friday, day 1, day 2, day 3. And those are 3 different types of setups that can occur. 3-day setups can coincide with the beginning of a new week, as we saw in the Japanese yen. So we had day 3 breakout traders in the market. Friday took out the high of Thursday and reversed and became a first red day. First red day is a day that opens below the close after a peak formation. Usually I like to see that take out or beat from the high of the week. So as we head into the new week, we've been looking at Monday, and again, I trade the US session, but I want you to pay particular attention to this pattern. So if Friday was our day 1 because it had a failed breakout at the high of the week, closed as a first red day is a high of the session, high of the day selling opportunity if it presents. Now, I want you to pay particular attention to this particular day. Blue is Asia, pink is Europe, London, and yellow, of course, is the US session. So we have 1 push in the Asian session, higher high, 2 pushes in the Europe-London window, and a 3rd push that coincides with the failed breakout level from Thursday's high of the week. So if we just sort of back this up, we can say that we have a day 2 on our Monday, which we'll just back this up, coincides with our Thursday high of the week level that failed. So you notice we went 3 levels of rise into the high of Thursday. So coming back to Monday's session, we started at 25, we went up to 50, then to 75, and pushed up into the high of the week with Asia, London, and right into the open of the New York session for a vertical collapse on day 2 through the low of the day and our new current low of the week. Now, there was major red news at 10 a.m., but this move was already in process And I'm just going to quickly dash over. I want you to look at this chart real quick. Day 2, that was our day 1, the failed peak formation at the high of the week on Friday, first red day, 3 levels of rise, and the collapse in the U.S. session. Now we'll talk about gold later, but I want to show the same chart, day 2, failed peak formation on our Wednesday. This is a day 2, because I get this question today a lot about how could you ever take this trade and blah, blah, blah. But this is the same template on a day 2, 3 levels of rise into major red news. We had a first bar entry for the vertical collapse through the low of the week. Now, if we just tighten this up, we're back on the Japanese yen. We have our opening range on Monday. That's our opening range, high low of the week, heading into our new week. And by the way, it's a new month. So this is the high and low of the month. Tuesday was an inside day. On page 69, we talk about the inside day opportunities if they present false breaks and trend trades or low-hanging fruit. Page 69. And that took me all of about 30 seconds to type inside day in on my chart. So what that does is it tunes me into the next day, and we see that it breaks the high of the inside day right at the Europe London Open. Doesn't break out, it just breaks the high of the day, triggering long traders into the market or getting traders chasing the move back towards the high of the week before collapsing for a 50 pip move back to the low of the day. And you'll notice major round numbers were in a 100 pip box, and they've come from just underneath 75 down to the quarter level, 25 at level 1. U.S. session is the low-hanging fruit continuation trade for a 25 pip parabolic trade to the low of the day. Day 1, day 2, day 3. We have a lower low on the inside. It's a break in structure and a pump up that breaks down into our Asian window. Pump and dump reversal trend trade on day 2 now, our new 3-day Wednesday to Friday cycle for the vertical collapse in the Asian session into the beginning of the Europe London window. We saw a parabolic reversal at the low of the day, the low of the week, the low of the month. Major red news. Follow through gave traders a 25 pip and a second entry New York Open for another 25 pips for 50 pips if they took the first bounce, first bar. If we look at the Canadian dollar, we had an inside day on Monday, the opening range. The high of the week was put in place on Thursday. We had an inside day that broke out on Tuesday. Tuesday, day 2 with day 1 breakout traders in the market. Day 1 shorts. First day, that's an opening range breakout that reverses and goes parabolic on day 3, Wednesday. Free cash Wednesdays, parabolic move in the London window. Europe London window parabolic through the high of the week that pulled back and consolidated into the close of the U.S. session, but we still had now day 1 breakout traders in the market. So coming back to post I put up earlier about Paul Tudor Jones, ask yourself where you were at in relation to yesterday's closing session. So we had first green day on Wednesday. First green day. So that's our reset, our day 1. And day 2 makes a higher high in the Asian window, higher high, higher low, set up for a dump and pump trend trade on day 2, parabolic trend trade on day 2. So we have our day 2 breaks out and consolidates sideways. Higher highs on day 2, breakout fails heading into our US window. Major red news breaks out and goes higher and dumps into the New York Open. Higher high, higher lows is the setup for the dump and pump and the parabolic continuation after the New York Open on day 2 on the US Canadian dollar. British pound US dollar cross, Monday's opening range was an inside day. But you will also notice that we had a breakout on Friday, and that inside day was a pullback to the breakout level from Friday. Coming back again to understanding who is in the market. Day 1 breakout traders in the market, breakout pullback, Monday's an inside day. And we go into consolidation and breakout on day 2, our Tuesday. That breakout failed. We had a failed breakout at the high of the week. That starts our day count now. Day 1, Day 2 is our Wednesday, which was an inside day, free cash Wednesdays. So again, differentiating the best instruments that offer us the best setups on the day. There were traders who may have been looking for that parabolic move to take out the high of the week, but we still took out the high of the day. It was a very clean 25 pip vertical parabolic move on our Wednesday, which is day 2 now. Failed breakout day 1, day 2, heading into our day 3, free cash Thursday. So understanding how we can get parabolic opportunities almost every single day if you are mastering the process. We have a similar setup to what we saw on gold and the Japanese yen, higher highs, 3 sessions of rise, except this market goes parabolic in the gap time after the 3-hour London window. Parabolic move prior to the US session opening. An example of where traders will notice that higher level longs are now trapped on major red news. New York Open collapses, major round numbers, for a 50 plus pip move back through the low of the day. Now I know there are going to be people who say we had major red news at 10 a.m. No problem. That was still a very clean 25 pip blow off. But if traders wanted to take some money off and leave a trailer in, we're already on the way down, a parabolic reversal. We've already had major red news up top engulfing. This is a death candle example for the blow off through the low of the day. The template, though, is what's just a beautiful textbook template, 3 levels of rise for the vertical collapse. So if traders took this trade after the major red news at 10 a.m., you'll notice again, 5 minutes after the news, we have an opportunity to participate in a 50 pip collapse. So if you're in this before the news, there's 25 pips. If you're in this after the news, there's 50 pips. So again, depending on traders' skill and level of confidence in executing that trade and understanding where we are at in the 3-day cycle, you will recognize this template: session 1, session 2, session 3. New Zealand dollar, we'll go over a couple more templates with the currencies, but just again the process. Friday was day 1 breakouts long in the market, and you'll notice that Monday broke out of Friday's high and closed as a breakout out of balance day as well. Day 1, day 2 longs in the market. Day 3 longs in the market on Tuesday. Wednesday was an inside bar first red day. First red day again is a sell high shorting opportunity, high of session, high of day, if indeed it presents. And you'll notice the same pattern again on our inside day. A break in structure, the lower low breaks through the previous day's low, the low of the inside bar, before marching up in 3 pushes to take out the high of the inside day as well as the high of the week. So think about this. We trigger shorts into the market, proceed up in 3 levels to hit their stops on longer time frames before the vertical collapse. Identical to gold. We'll take a look at the first bar entry. So we had a candle that was not quite 15 pips. So again, a smaller pair similar to the Aussie dollar. If traders aren't comfortable trading gold, it has Aussie dollar, New Zealand have very similar movement as does euro and pound, just different variations of how their templates will present, but they tend to move in similar directions. So traders who took the first bar entry on New Zealand dollar got an easy 50 pips. If they took the first bounce, this still gave traders 25 plus, maybe 40 pips, depending on where they exited or held on to this move. But coming back to our larger template, again, understanding the process. Opening range, opening range breakouts, day 3 breakouts in the market from Friday, inside day, first red day, 3 levels of rise for the vertical collapse back to the low of Tuesday, which made a higher low. Didn't quite get to Monday's low. Monday, Tuesday form our initial bounce and opening range. That higher low can be a level where this fails, and you'll also notice major round numbers at 50 New Zealand dollar. So we'll take a quick look at gold. Just keeping things simple. Monday's opening range. We had day 1 breakouts, first green day on Friday, day 1 breakouts on Thursday, peak formation, low of the week. We'll just highlight this. That formed our day count heading into day 1 on Thursday, day 2 on Friday, and day 2 breakouts in the market. For the very similar pattern, you'll notice they go the other way They make lower lows, but they also made a higher high, which is the break-in structure on the inside and the setup for the dump and pump. We had a nice vertical short squeeze right at the open of the U.S. session on Monday for the vertical parabolic move on Monday, day 3 in a 3-day setup, blowing off in the direction of the trend. We start our new weekly template. Monday's day 1. Tuesday, day 2 is an inside day. Wednesday gave a vertical blow off through the high of the week. No major red news on the calendar. So again, asking yourself, why would a market go vertical when there's no major red news? That's the setup for the pump and dump. We had the vertical reversal, 100 pip drop, and that continuation that broke outside of Tuesday's low of the day. We now had a market that is out of balance, closing outside of the previous day's range, giving us our first red day. And there's our gift, our little 3-session setup for the vertical parabolic move. We're going to go and just take a look at the first bar entry, thesis being high of the day to low of the week. Now, I've repeated this in several videos, but I'll make this point of saying it again. That first minute closes. We'll just zoom in on this here. And we'll draw that line across. You'll notice that first minute closes, and that traps a large percentage of the volume above that range. The second minute starts to proceed down. And by the time we get to 5-minute close, we are at the low of the day, and we have caught the entire day's volume. Now remember what Paul Tudor Jones said. Imagine your position was at the close of the previous day. So traders who were short at the end of this day, obviously, if they had any size, probably would have got margined out. But now that we're down at the low of the day, our thesis is one full range expansion as a potential profit target. Low of the day bodies, high of the day bodies for a full range expansion as a potential target. And you'll be surprised that that hits that with about 5 minutes left in the first hour. So remember this template, because you're going to see it again and again and again. And if you miss it the first 90 or 95 times, you have to kick yourself if you're missing it after 100. So, some traders have said, I don't know how somebody could see that in live time. If you see this at least 100 more times, hopefully you'll get this, because it's going to occur again and again and again. And we'll go back to last Thursday, June 29th. And again, we're at the end of a month, but just repeating that, you can only see it if you're expecting and you know what you're looking for. But this template, we had 3 levels of rise, a different variation. Asia puts a high and low in place. They consolidate at the low of the day before pumping up 3 levels of rise just prior to major red news. If we put our range expansion on there, one full expansion of bodies to body, high and low, we're looking at approximately 150 pips as a profit target. First minute, if we draw our line across, guess who's trapped? They're not letting those traders out. So you have to understand the first bar, when it moves in line with our thesis, is because we now have volume trapped above that level. And you'll notice where we close at the end of 5 minutes. We're already outside of the range, en route to completing our range expansion. So same type of template. We could just lower this down to the body. Same type of template, different day, same variation. But this pattern will happen again, and again. Free cash Thursdays on gold. Now, if we look at the NASDAQ, 15-minute chart, again, Monday's opening range, Tuesday inside day, that was our Independence Day, July 4th in the United States. The market breaks out in our Europe-London window at the end of Asia before giving us a parabolic explosive reversal right at the New York Open on Wednesday. Free cash Wednesdays are day 3. And that market closed on top of the Asian range, or right near the open of the Asian range. And you'll notice that this would appear as a bull candle on a daily chart, or a bull pin. That market broke down, though, in the Asian session. Lower highs, lower lows. It breaks out of the peak formation low in Asia and proceeds to make lower lows and then a pump up right before the U.S. session window for the vertical collapse. So ask yourself again, if traders were long at either the break of the high of the week, breakout traders in the market, or long at the close, or long in this session in general and holding on, that vertical collapse, do you recognize anything before the U.S. session opens here? They go into consolidation before the session opens. If you see a market consolidating above a low or below a high for an extended period of time without taking it out, it is getting ready for a parabolic explosive move. So again, understanding we had a failed breakout that collapsed and reversed on our day 2 in our Wednesday to Friday template, peak formation high for the parabolic blow off in the US window. So again, mastering the process, day 1, day 2, day 3, failed breakout, reversal, consolidation above the low, major red news for the explosion and the continuation in the New York Open for a measured move. Now, if we take the low of the U.S. session and the high of the U.S. session body to body, isn't that interesting? We did a full reversal range expansion on the opposite side. A fantastic opportunity for index traders today on the NASDAQ 100. S&P 500, this is a 15-minute chart. Monday was our opening range. We had our inside day again, July 4th, Independence Day. And then a breakout on day 3, similar to the NASDAQ. Breakout that reversed in the U.S. session, parabolic reversal, consolidation without taking out the high of the week. So the NASDAQ took out the high of the week, but we have a breakout pullback and then the collapse for the continuation. Remember, markets do only 3 things. If they trend, they break out, they pull back, and they continue. Or they break out, they reverse and fail and give us a reversal opportunity. Or they stay range bound in a trading range. We have the vertical collapse that breaks the low of Wednesday's session and continues to make a lower low and auctions back up into the breakout level just prior to our U.S. session window. So as Peter Brandt talks about, this is also an example of a pattern within a pattern, a rectangle at the low of the day. So coming back to classical charting, we can just take our U.S. session high-low and we can target, 2 full range expansions. Isn't that interesting for the reversal? But we can also take the pattern within the pattern. We'll just zoom in on this for multiple range expansions as targets on a smaller rectangular basis. But there are opportunities if you master the process. Day 1, day 2, day 3, day 1, day 2, day 3. It's simple, reproducible, scalable, and there's no excuses for not being able to reproduce your results. So mastering the day count, understanding the templates and the possibilities for the setups. Now I'm trading 3 session opportunities on day 3. If I'm trading an Asian cross, same goes for an Asian session pair. So this was a fantastic day, and really literally it is offered, I mentioned this earlier, any day or any week we have a major holiday in the U.S. We had Canada Day, no markets were closed, but on Tuesday the markets were closed. They closed early on Monday, and we had some massive moves this week. So if you master the process, traders, there, as Jim Rogers says, there's money laying over in the corner on the floor, and all you have to do is walk over and pick it up. And that comes down to you being on top of your game, following the process, finding the best instrument on the day, selecting one. It doesn't matter which one you take the trade, execute as flawlessly as possible, manage your risk, understand the asymmetrical risk reward opportunity that trade may present in terms of measured movement, lock in the money, get off the screen. It's going to be here again tomorrow. There'll be more opportunities next week, the week after, day 1, day 2, day 3. The playbook has all of that in there. Master the setups, master yourself, master the trades and executions in live time, and may the markets go with you.